Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Jared Meyer and I work at the NinjaTrader Business Development team in our Denver, Colorado office. We have a very special event with you today with Dale from TraderDale. I just want to mention it's important to understand there are substantial risks in trading commodities future contracts and Forex. You should carefully consider whether such trading is suitable for you and that will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker. You could even incur losses beyond these amounts. Please inquire at ninjatraderecosystem.com/risk disclosure for more information or for a copy of the CFTC full risk disclosure. All right, also please do remember that these training webinars are not a solicitation or recommendation, but simply educational in nature. Also, I want to let everyone know that this presentation is brought to you by NinjaTrader LLC, which is the technology company responsible for developing and supporting NinjaTrader trading software. Any brokerage-related questions should be directed to NinjaTrader Brokers directly at area code 312-262-1289 or by emailing brokerage-sales@ninjatrader.com. We are very excited for this unique event in which Dale of TraderDale demonstrates how volume profile trading works, the logic behind it, and why it's the most powerful tool he's uncovered in his entire trading career. Thanks again for your attendance today. Without further ado, it is my pleasure to welcome to the NinjaTrader Ecosystem webinar room, Dale. Please take it away, Dale.
Hello everyone, I hope you can hear me. Thanks so much for being here, thanks so much for attending. Our time today is limited, so I'll try my best to be to the point as possible. So time together is well spent. If you have any questions during the webinar, I would prefer if you ask them in the end. Hopefully we'll have some time left, maybe a few minutes, and I'll be able to answer them. If I won't be able to answer them in the end, I'll answer all your questions via email, so you can send me an email to my address and I'll be answering all the emails with all the questions you may have. Alright, so let's move on. I won't be talking about myself too much. One thing I probably should mention is why I think I'm different from most of the other educators. The thing is that I actually have the industry certifications as well as trading experience, and this is what most of the false gurus don't really have. They don't have any certification nor any industry education. So I started at the university. I started trading at the university. I got my degree in finance. Then I became a certified portfolio manager, investment manager, and I got my financial derivative certification. And then I started working as a market analyst in a broker company, but I left the company and I started trading, which was around 2008. I started with stocks, then I went into something a little bit more complex, which was the investment certificate. Then I started trading Forex with automated systems, and after that I started trading Forex manually, which I've been trading now for several years. So as I said, I trade mostly Forex. You know, I've tried so many indicators when I was starting trading Forex, but as most of the trading novices, I was looking for a holy grail, which I thought was some combination of indicators that would generate me a big pile of money quickly, but unfortunately that didn't happen. So I struggled, I failed, and in the end I found out that the key to successful trading lies elsewhere, not in simple indicators, but in something completely different. Have a look at this picture right there, and those 10 top currency traders, those 10 are the biggest banks in the world, those are the biggest institutions in the world, and they control, if you count the market share, they control 2/3 of all Forex volumes. So those are the biggest institutions in the world who manipulate and move the price. And those guys don't really care about indicators and stuff like that. They have massive volumes, they have massive amounts of trades every day, and with their volumes we can actually track them. We can track their volumes in the market. We can use that in our advantage, that is our edge. And actually I think this is the only edge we have, because those guys will never be able to hide those volumes they create every day. So every day we'll be able to track them, to track their volumes. And for that reason I don't really use any indicators, because I think that volumes are the key. Volumes are the most valuable information you can get from the market. So let's move on, and let's have a look at the volume profile, which is a tool that I use to analyze the market, which helps me to see where the volumes of the big institutions lie. Before you can see a picture of daily volume profile. Volume profile is basically a histogram. This is a histogram, and it shows volume at price, which means that the thicker the histogram, for example in this area, you can see in this area that the histogram is the thickest. So in this area there were the most volumes accumulated throughout the whole day. So in this price level right there, this is the most interesting place for the institutions, because they placed most of their volumes there. This is what volume profile shows you. It's a very powerful tool. It is not time frame dependent. So to give you an example, if this was, for example, a 30-minute chart and we switched it to a 15-minute chart, then only thing that would change would be the number of candles. You would have twice the number of the candles, but the profile would look exactly the same. So the profile is not time frame dependent. As I said, it helps identify positions of institutions, and usually it shows daily profile. Daily profiles are the standard default profiles. So it is one profile per 1 day. This is 1 day, and you have one profile. That's the standard volume profile. I was working with that for quite a long time with the standard profiles, but then I moved from this to using flexible profile. I've developed myself a flexible volume profile. It looks like this. This is a picture of flexible volume profile that I developed. And the important thing that is different from the standard volume profile is that in this volume profile you can actually select any area in a chart and see the volumes within that area. So for example, in this case I selected 3 areas, and in each of those areas I can look and see where the volumes were. This may not look like that it's that significant in your trading, but if you start using volume profile, and you will start with the daily profile and then you move to the flexible profile, you will really see that it's so much different, and that the flexible profile has so many options that you can't do with the standard profiles. You'll see that when I show you the strategies that I use. So as I said, you only select the significant areas you are interested in with a flexible profile. And very cool thing about volume profile is that it works on all time frames. So it doesn't matter if you are intraday trader, if you are a swing trader, or if you just plan your investments with a volume profile. Time frame doesn't matter. Only thing you need to change is the time frame. So for example, if you trade intraday, you do the analysis on 30-minute time frame. If you do swing trading, you do the analysis in 1 day time frame. If you do investments, you can use, for example, weekly time frame. What changes is only the candles, but the volume profile is still the same. The logic behind the volume profile is the same. The setups are still the same. So it's a very versatile tool. Another cool thing about the profile is that you can trade all instruments you like with the profile. You can trade Forex, you can trade futures, you can trade stocks, index is metals. You can also trade cryptocurrencies with a volume profile. It doesn't really matter. The logic behind the profile, behind the setups is still the same. You are tracking the big institutions through the volumes. So the idea behind volume profile is the same, no matter the time frame, no matter the instrument you are trading. That's what I really like about the volume profile. I need to mention that to trade with volume profile, you need a very good data. The best data you can have is tick volume data. And fortunately enough, NinjaTrader provides that kind of data. For that reason, the flexible volume profile I developed is for NinjaTrader 7 platform. This is a screenshot from NinjaTrader 7 platform, because NinjaTrader 7 is able to give us tick volume data, which is the most precise data you can have. And for that reason, this volume profile doesn't work with standard MetaTrader. So it's not possible to use it for MetaTrader. There is more information about the volume profile I developed if you click this link. Let me try to copy it in the chat. It's a link to my web page where you can see some videos and description and some strategies you can use with a flexible volume profile. I hope you can see it in the chat now. And let's move on. This is a comparison of volume profile on a MetaTrader and volume profile in NinjaTrader. MetaTrader, the standard MT4, can only use 1 minute data. That's the best it can do. Alright? And NinjaTrader 7, as I said, uses tick volume data. And this is the difference. If you look at the two pictures, it's the same currency pair. I think it's US dollar, Canadian dollar, 30-minute time frame. Now let's have a look at the profiles. For example, in this area, and compare it to this area, or this area compared to this area. I hope that you can see the difference, how rough the 1 minute data from the MT4 is, and how precise the volumes, the tick volumes the NinjaTrader provides is. So this is the major difference, and I think that the MT4 volume profile is good for start, you know, to install it, have a look at it, how it looks, to play with it 1 or 2 days. But if you actually want to trade, and you mean trading seriously, then you absolutely need good data, good software. And for that reason, I work only with the NinjaTrader, and I don't use the MetaTrader volume profile, because it can't go any more accurate than it is right now. Than this, it can't go more accurate. So unfortunately, we can't use it with MetaTrader, and we need to go for NinjaTrader, which is great because NinjaTrader is far superior than the standard MetaTrader software. Let's move on to the core of this webinar, which is the trading setups. But before that, let me address one pretty important thing that you could be skeptical about. In fact, you wouldn't be really a smart investor if you weren't skeptical about this. The thing is, why would I reveal to you my working trading strategies? Why not keep it for myself? Why not keep it secret if it's really that good? You know, I have seen so many scammers, and the brokerage company I worked for wasn't really that different. And I want to do things differently and actually help people. And helping doesn't really hurt me in any way. So do you know how many people like you and me trade currencies? How much volumes we control? It's only 3.5%. Only 3.5% of all volumes are controlled by retail traders. That's us. We are the retail traders. This is statistics from Bank for International Settlements. You can look it up on the internet. So retail traders like you and me make only 3.5% of all the trading volumes. The rest is the financial institutions. So helping few hundred guys with our trading simply can't have any impact on the market, and it can't endanger me and my trading strategy. So I don't think there's a reason not to share. Another point I need to make, this is not a get-rich-quick magic system. I won't lie to you and make any false promises. It takes time and hard work to learn and master volume profile. If you are looking for a magic formula, unfortunately I think that you're in a wrong place. So I can't really make any promises. I will show what I do, what works for me, and that's it. I can't guarantee that it will work for you. Everybody's different and my trading style may not suit everyone, and that's a fact. What is also a fact though is that it's the best trading approach I came across in my whole 10-year trading career. So what I'm about to show you now is the best I know. So those of you who don't mind that I'll be not giving you a magic pill today, let's move on to the core of the webinar, which is the trading setups that I use. Here we go. Setup number 1, volume accumulation setup. It's my most favorite setup of all the setups. And I look for this setup when I see a price action channel like this one. This is a sideways price action channel, or a rotation. And why I look for rotation? Because it takes time to build up a position. Now I'm talking about the institutions who need time to build up a position. So they do it in rotation, they do it in sideways price action. And they do it slowly. They don't want anybody to notice that, so they need to do it slowly. They do it in rotation when nobody can see it, and after that they initiate either strong buying activity or strong selling activity. In this case it's strong buying activity. So when I see sideways price action like that in the picture, and from this sideways price action initiation of strong buying activity or strong selling activity, I use the flexible volume profile and I select the area with the rotation. So I select this rectangle. Why I do that? Because I want to see where the volumes, how the volumes were distributed throughout this whole area. And when I select it, I see, for example, in this case, that the heaviest volumes were right there. This is the place where the volume profile was the thickest, or is the thickest. So I draw a line from there and I wait. I wait for the price to come back to this area, and in this case I go long from there. What is the logic behind this? The logic is those volumes were volumes of strong buyers, alright, because they pushed the price upward. So because of that we know that those were volumes of strong buyers. When the price comes back to the area where the buyers entered most of their positions, those buyers will be defending their positions and they'll push the price upwards from this area. They'll push the price upwards to defend their positions, to defend their interests. And that's the move you are waiting for. This is the price, this is the place where you enter a position, this is where you go long, this is the movement you want to participate on. Alright, I hope this makes sense. This is the reason number 1 why this setup works. The reason number 2 is, let's say that those guys who are accumulating their buying positions there, they push the price upwards, but they got rid of their positions there. So they don't really need to defend their positions there because they don't have any. But the sellers who are pushing the price lower don't know that. They don't know that those buyers won't be defending their positions. So what the sellers do is they quit their selling positions right there because they don't want to risk a fight with potential strong buyers. So they close their positions in this area, and you probably know that when you have a selling position, you need to enter a buy order to get rid of the position. So they enter a long positions, or they close their positions, which drives the price upwards from this area. This is what drives the price upwards. So there are actually two reasons for this scenario, for this setup to work. Alright, I hope that is clear enough. I'll just show you two examples, so the setup is more clear. I would really like to teach you this setup so you can try it on your own, try to backtest it, and look how good it works. So right there you can see a volume accumulation area, sideways price action. Alright, so you can select, you can actually select this whole area, not just this place I selected, but it doesn't really matter in this case. You can see that the heaviest volumes within this rotation area were right there. This is the place where the volumes were the thickest. Right after that, you see that there was a very strong selling activity, which indicates that those volumes were volumes of strong sellers who pushed the price lower. So what you do is you draw a line from the place where the volumes were the thickest in the accumulation area, and then you wait for a pullback until the price hits the line you've drawn, and in this case you go short. You enter the market with a limit order. You don't need to wait for any sort of confirmation. You just enter your trade there. Only thing you need to be careful about is that you don't trade during macroeconomic news. But other than that, you are all set if you just trade with a simple limit orders. Let's have a look at the second example. In this case, you can see that there was a sideways price action right there. So again, you select the area with the sideways price action, and you look at the volumes within this area, and you see that the heaviest volumes accumulated in this area were right there. This is the place where the institutions placed most of their volumes. So you draw a line and you wait. You see that there was a strong buying activity, so you know that those volumes were volumes of strong buyers. So you are waiting for a long trade. And when the price returns to this area where the volumes were the heaviest, you go long from there. And that's it. That's the setup number one. It's my most favorite. So I hope it was clear enough for you guys. I hope that you will be able to try it on your own. And let's move on to the setup number two, which is called trend setup. It's called trend setup because I use it when there is a trend development. Trends usually happen after volume accumulation. Now we know what volume accumulation is, so I can mark it in the chart. This is a volume accumulation, and obviously this is a trend. So what happens in a trend? In trend, the institutions are pushing the price aggressively. In this case, they push the price aggressively lower. In a trend, the volume profile is usually very thin. What is the reason behind that? Why the profile is thin when there is a trend? The reason is that the big institutions don't have time to add or accumulate their positions in such a strong and fast price development. They need time to accumulate their positions. So for that reason, the profile is usually very thin. And what I do is that I look for places where with significant volume clusters. In this case, there was a place with a significant volume cluster. Significant volumes got accumulated in this area. And what happened is that strong sellers were pushing the price lower. Then they stopped for a while, and they started adding to their selling positions in this sideways price action. After that, when they added enough to their selling positions, they pushed the price even lower from there. So now we know that this volume cluster is actually a place where strong sellers were adding to their selling positions. So if the price comes back to this area, if it makes a pullback to this area, it will most likely make a reaction, because those strong sellers will be defending their positions. It's the same logic as in the setup number 1 I was showing you before. So what you do when you see a trend like that, you use the flexible volume profile for the trend area, you look for significant volume clusters like this one, then you look for the heaviest volumes within the volume cluster, which were right there, you draw a line and you wait. You wait until the price returns back to the line, and if there was a downtrend, you enter a short level. You enter a short position, sorry. If there was an uptrend, let's say that this is an uptrend, right? The profile for this area would look, for example, like this. This is a volume cluster. This is a volume cluster with the heaviest volumes accumulated right there. So you draw a line, you wait for pullback, you wait for the price to come back, the area where the volumes were the heaviest, and you go long from there. That's a scenario for uptrend. Let's have a look at two examples of the setup number 2. The left profile, the left picture, shows a downtrend. So what you do is you draw a rectangle over the trend area and you view the volumes in that area, and you see that the most significant volumes within the trend area, within the movement, were right there. Those two significant volume clusters. So you draw a line from the place where the volumes were the heaviest in those volume clusters. This is the line number 1, this is line number 2, and you wait for a pullback. You wait for the price to come back to the area. In this case, you go short from there, and you wait. You wait. You don't trade the second test. I only trade the first test. So don't trade the second test. Sometimes there is a nice reaction to the second test, as you can see right now, but you will have better results if you only trade the first test. So you wait and you wait until the price reaches the second level you have, and you go short from there. And that's it. In case that the price turns a little bit sooner before reaching the level, let's say 1 or 2 or 3 pips sooner, like in this case, you discard the level and you don't trade it anymore because it's already tested. Unfortunately, you weren't able to get into the trade, but the level itself is tested, so you don't trade it anymore. Let's have a look at the second example. There's also a downtrend, so you also draw a rectangle over the downtrend, and you see where the significant volume clusters in this downtrend were. So there's one, there is a second significant volume cluster. Heaviest volumes in the first significant volume cluster were right there. The heaviest volumes in the second volume cluster were right there. So you draw two lines and you wait. You wait for pullback, you go short from there, then again you wait for pullback, and when the price reaches this area you go short from there. This is the setup number 2. I hope that it is clear enough for you guys. It's pretty simple setup and I use it basically every day. Let's have a look at let's now have a look at the setup number 3, which is the rejection setup. I think that out of those 3 setups I'm showing you today, This one is the hardest to understand. The reason probably is that it takes a bit of discretion to say if the setup is there or if it isn't there. What we are looking for in setup number 3 is sudden price reversal, which could be, for example, pin bar pattern. In this case, the pin bar is right there. This is a pretty significant pin bar, very strong one, so in this case it's pretty easy to spot this pattern. But as I said, the profile is versatile and it's not time frame dependent. So if this was a 30-minute time frame and we switched it to 5-minute time frame, there probably wouldn't be a pin bar on 5-minute candles. There would, for example, be something like this, and there wouldn't be a pin bar. But this is also a sudden price reversal, so you need a little bit of imagination to select those areas. And when you see such a strong rejection area, you use the flexible profile only for the area with the rejection. So in this case, this is rejection of higher prices. This is rejection of higher prices. Rejection of lower prices would look like this. And as I said, you select the area and you look in the rejection area where the volumes were the heaviest. So in this case, the heaviest volumes were right there at this volume cluster that got created within the pin bar, within the rejection. So you mark the area, you mark the level, you draw a line, and then again you wait for a pullback, and when the price touches the line, when it returns, you go short. You go in the direction of this pin bar, of this formation. So if there was a selling formation, like a selling pin bar, rejection of higher prices, you go short. If there was a rejection of lower prices, you would be entering a long position. But you will see that in the examples. The reason behind this is that strong sellers, strong and aggressive sellers, were rejecting higher prices. So the buyers were pushing the price upwards, but the sellers were really aggressive and they pushed the price aggressively lower. And this is the place where the sellers were most aggressive. So this is the most important place which the sellers will be defending when the price comes back to this area. So for that reason, you'll draw a line there and wait for the price to come back, and you go short. Alright, so let's have a look at the examples we have. In the left picture, you can see a rejection of higher prices, and again you select with a rectangle with a flexible profile the area where the rejection occurred, and you see that the volumes were the heaviest right there. So you draw a line and you wait for pullback. This is a pullback to your line, and because this was a rejection of higher prices, you go short. You enter a short position with a limit order. Simple limit order will do. So let's have a look at the second picture. This is a rejection of lower prices, pretty strong rejection of lower prices actually. So again, you select the rectangle with the rejection, where the rejection occurred, and when you do that, you see that the heaviest volumes within the rejection were right there. This is the most significant volume cluster within the rejection, which means that strong buyers were aggressively adding to their positions there to push the price upwards. So what you do is that you wait for a pullback to this area where the volumes were the heaviest, and you go long from there. And that's it. That's the whole logic behind the setup number 3. So if you found this helpful, guys, then I think that you will really like my web page. It's trader-daily.com. There's a lot of quality content articles, a lot of educational videos, recent trades posts with all the details and all the reasoning behind the trades I made. And if you really want to learn, which you do since you registered for the webinar and you stayed here until now, you know that mastering the volume profile will lead to significant improvement in your trading. And that's why you are going to want to become a member of my private trading course. Let me just very briefly show you the contents of the members area. If you enroll into the course, there is a daily level section. I update this section twice a day. In this section, there are the strongest support and resistance zones based on the volume setups I've been showing you today. This is a table I update twice per day. You can see that there are the strongest support and resistance zones for Euro dollar, Australian dollar, US dollar, for US dollar, Canadian dollar, and US dollar, Japanese yen. And I also do this table twice a day for currency futures. What I also do is that I shoot a video commentary, which is 5 to 10 minutes long. I do that every day, and I comment on the previous trades that I took, on the trades that I will take in the future. I talk about the setups. Sometimes I show you some tricks. I show you how I took some trades, how I see the markets. It's just a commentary of the market, everyday commentary of the market, which is I think pretty good educational material. Pretty similar to that is the swing trade levels. There is a table with 15 Forex pairs, and for those pairs I select the strongest support and resistance zones, also based on the volume setups. So if you are trading swing trades rather than intraday trades, you can use this table to be more sure in your trading. I update this table every month, and what I also do is that I shoot a video, a swing trade video, and this video usually takes up 15 to 30 minutes. I do new video every month, and again in those videos I show you the trades that I took, trades that I will take, the logic behind those trades. I do a commentary of trades, commentary of markets. So again, it's I think pretty good educational material. There's also a video library where you can watch all the videos, or the daily videos, or the swing videos. There's literally tens of hours of content, of video content, which is I would say pretty strong learning material. Those videos will speed up the learning process quite a lot, I would say. Then there is a video course. It will lead you through all the essentials of my trading strategies. That will put you on track pretty quickly. Just a few examples. There is, for example, a video that talks about trade management, alternative trading approach, about swing trading, about my setups. So if you start with my course, you definitely want to go through the video course. It's made to help the new guys in the course. Part of the course is also a download section where you can download a lot of useful trading tools. You can also download my custom-made expert advisor, and this is a program that automatically trades the trading level you manually enter there. It has a lot of features. For example, it prevents you to take trades during macroeconomic news. It prevents trading against sudden spike moves, or prevents trading when there is too wide spreads. So as you can see, it's pretty helpful. It's also able to discard a level if the reaction to it came a little bit sooner, or it can move your stop loss automatically to secure your position. There's also a TD line, which which is a pretty helpful tool that automatically draws the levels from my daily tables I showed you a few moments ago into the MetaTrader charts. Unfortunately, this only works with MetaTrader, but we are working on implementing it into a NinjaTrader chart. So it will also work for NinjaTrader. And those TD lines really make following the support and resistance zones that I publish every day pretty easy. Before you can see a typical pricing model that I use for my trading course. There's monthly membership, quarterly membership, and a yearly membership. The unofficial price for anybody who's interested in a lifetime access is $1,497, but I'm not going to charge you $1,497 today. Instead, if you enroll using a link that I will give you later, you will get the lifetime membership in my private course for just $497 for this price, which is, if you do the math, it's 3 times cheaper, and it will save you $1,000. And if this is not enough to push you over the edge, then I want to do one more thing for you that's really special. I've decided to give you this bonus as the flexible volume profile that I developed. You will get the lifetime version of it. I usually charge $149 for it, and also you need to be a member of my course to have it. But you can have it for free as an additional bonus to the lifetime membership which I've offered you. So everything you'll be getting for the really good price, $497, is the lifetime membership in my Pro Forex course, which includes the daily levels, a daily video every day, swing trades, access to the download section with an expert advisor, with a TD lines, with a MT4 volume profile. You will get access to the video course, access to the video library with hours and hours of video content. You will get access to the members forum, and you will get the lifetime member support. Plus, as a bonus, as I said, you will get my custom-made flexible volume profile that normally sells for $149. You will get that for free. And by the way, all this would normally cost you $1,646. That's the standard price, but if you order until the 6th of May, you can have this ridiculous discount, and you can have it right now for $497. How cool is that? You know, this is a pretty crazy discount. So listen, I can't do this for every single person, and I need to limit the members' number somehow. Otherwise, I would just get tons of emails and questions, and I wouldn't really be able to do a good job, and you would feel frustrated. So for that reason, I need to limit this offer for the first 50 people to sign up. I would love to offer this to everybody, but unfortunately that's impossible, so it is limited. So you can either get it now or you can potentially miss it. So let me just copy the link for you into the forum, into the chat. Here we go. I hope you can see it. And if you want the special offer, you just need to click the link, and it will get you into a discount page. You need to scroll down, and at the bottom there is a red buy now button, and there's also a yellow button if you want to split the payment. You click it, and it will take you to a checkout page where you will just fill in your credentials and you pay with PayPal. So right after that, you will automatically get the lifetime membership and access to download the flexible volume profile. So that's it, guys. I think that's everything that I wanted to cover today. I really hope you liked the webinar. I hope that you learned something new, something useful. I really hope that you will start backtesting and trying all the new ideas, and that you will start using the volume profile. I also hope that you will delete all the indicators you are using right now. And I'm not sure if we actually have any time left for the questions. I think we spend all the time, but you know what? there should be my email address. There is my email address right there. And if you have any questions concerning anything, you just shoot me an email and I'll answer all your questions. There were almost 1,000 people registered for the webinar today. And I'll take my time and I'll sit in front of the computer and I'll be answering all the questions until all the questions are answered. I hope that sounds good. It's better than answering 1 or 2 questions now. But I'll answer all of them. Maybe I'll also do an article in my webpage where I cover some of the best questions you got. So I would really like to thank you all for attending. Thanks also to NinjaTrader for making this webinar possible. And I'll see you guys next time, maybe in some next webinar or maybe in the Forex course. And I wish you all happy trading.
All right. We want to give a special thank you to Dale of Trader Dale for his great presentation today. Please do take advantage of that email address that he's providing on the screen for your questions. Also, I want to let everyone know that everyone in attendance here will receive an on-demand recording link via email. So please keep an eye out for that message. It should be in the next couple of days. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find some value in these events, we hope that you will attend them on a regular basis. This is a link I just put in as to future webinars, so take a look at that when you want to attend some other ones. And also, we just want to remind everyone that the information provided was out of Trader Dale and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. We do hope that you enjoy the rest of your day. We hope to see you again in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.